Good morning, all. I hope you are well, and I hope you had a great weekend. And I hope you are suitably refreshed for this coming week ahead. So, I'm going to break down my pairs for you now. The pairs which I have on watch today, which, as you can see, are CAD Yen and natural gas USD. I don't normally trade natural gas USD, but every dog has its day. And if it's in a high value area, then we need to be paying attention to these pairs as traders. So, without further ado, let's break down these pairs down for you now. So, CAD Yen on the higher time frame, the picture as I see it, the narrative, price action is always speaking to us. It's just for us to decipher what it's actually saying. And what it's saying to me is that we had this inflection point, we have this sharp move up there. Let's just zoom in a little bit. We had a kind of sharp move up there, a sharp move down, and then we have this non-progressive price action. Okay, so after moving down and moving down from here, price moves sideways in a very non-progressive way for a period of time, and it gives us this 1, 2, 3 wave move. We even have a 1, 2, 3 wave move there. We have this kind of middle section, this 1, 2, 3 wave move there. We tap into this area. As I've said before, when we have a sharp move up followed by a sharp move down, that's often the case that there's a lot of liquidity there to send price to the downside. We usually break above these higher time frame liquidity points as we do here, and we do push to the downside. However, sometimes what happens, in all norms, what we would normally anticipate is an impulse correction continuation, and typically speaking, we would take out lows such as this one, this near miss to here, and then find our way down to here. But sometimes what price does is it comes up and forms a scoop double top before dropping to the downside. So there's nothing abnormal about this, so we have the 1, 2, 3 wave move, a scoop double top, and now we're anticipating this move to the downside. So because price obviously didn't find enough liquidity here at this ray line here to send it to the downside, we can now remove that from the chart and focus on what's more relevant, what's more recent. So what can we see here? So we zoom into this part here. We have that sharp move up, sharp move down again. We come back up and we narrowly miss this area of value. Okay, but we do so in the form of a bullish wick. Okay, and often these bullish wicks, so when we get a bullish candle with a green wick above it, often they get filled more so than if it was a bearish wick. Okay, so we scoop back round again. We form that impulse correction, but we don't get the continuation, and we reject from this area price. This is kind of what we call an M style pattern. Okay, so what happens is we get the impulse correction, and then sometimes the correction becomes so wide or voluminous that we end up breaking to the upside. So we end up with this kind of, by M style pattern, I mean something like this. Hold on, what's happened to the paintbrush tool? There we go. So we end up with this kind of like this, tap into an area of value and then drop. That's what we call an M style pattern. I don't believe you'll find that by Googling it. You'll find in various shapes and forms these other patterns that we look for on Google, but that's something quite unique to the Falcon strategy, which I am actually trading. If you'd like to learn more about that, if you're watching externally via our private Discord community, then you could do so via the link on my YouTube channel. And so what happens then? We tap into that area there. We break above, as we often do on the higher time frames. As I've said before, we tend to break above these, catch people the wrong side of the market who believe what was previously resistance becomes support once it's broken above. We then break above, push back down, and then we have this kind of confirmed this evening star formation. You can see that we ended on a massive wick. When we drill down to the lower time frames, you'll see that this is largely just volatility, a volatility spike on pretty much all time frames. But we have that kind of bullish candle, that kind of stall in price, and then a bearish candle which closes below the kind of star, below the stall in price, and in this case retraces the entire body of the previous green candle. So that's a confirmed evening star formation. We then drill down. So we've done what we needed to do. Price has tapped into this area, broken above, broken back in, given us that evening star formation. And now I'm just looking for entries on the lower time frames. You can see that we have pulled up. We did pull up by way of Friday's daily candle quite a bit quite a fair bit. But in terms of this overall range, even if we include the wick, we've still only pulled back only 50% of the move. So I'm happy with that. You can see this is a big wick on the daily chart as well, and on the 4-hour chart. So when we see it on when we see a wick on multiple time frames, that gives me a clue that this is just volatility. I would pay attention to this, but only if, for example, I was in a trade and I was managing the trade and we were in this area, just in case this was some kind of wick fill where, you know, we tapped into that area, pushed up, did something like this, and then dropped. I would be paying attention to that wick, but only for kind of management purposes. And one of the things we can use sometimes to determine whether these wicks are actually part of price action or a volatility spike is to switch to the line chart. And if the wick doesn't occur, then on that particular time frame, that is just a volatility spike. And of course, as I've said, the more time frames that these wicks occur on, then the more likely they are just volatility. You can see we were squeezing in this area here. So when we broke above, we were kind of squeezing up to that area. And you can see that price is well and truly broken below this squeeze in price. And it's broken below here now, giving me a clue that we are well and truly headed for a move to the downside. So there's not a great deal more to report. This is quite a simple trade, but the next thing I ask myself is, if we are headed to the downside, where is the liquidity likely sat? Well, you can see we have a bit of a sharp move up there, followed by that sharp move down. Okay, we had a consolidation here, so we had this kind of 1, 2, 3. However, there was not enough liquidity here. Often there is within these little structures. There was not enough liquidity here to send price to the downside, because it just broke through that without respecting it almost in the slightest. So that gives me a clue that when we have this sharp move up here followed by this move down, that the liquidity is likely sat here. Okay, so with that in mind, what I'll be looking for today is I'll be looking for the following. So let's just put that away for a second. I'll be looking for price to tap into this area, because there's no kind of structure leading up to here. I wouldn't be taking a risk entry where we kind of look to call the top. Okay, so we look to get in with a relevant rejection candle. I'll be looking, there's been no structure to this move at all. So I'll be looking for price to just tap in and show its hand, as it were, and move down impulsively. We may break just above, and tap into this little consolidation as well. But this is the one that I'm focused on. If we tap into that, push down aggressively, that gives me a clue that there was a lot of liquidity here, which would likely be the causation of a move to the downside. And then I would look for the consolidation afterwards, which is in most cases the banks and the big players stacking their orders for the next move to the downside. So the consolidation afterwards would be the confirmation that I would look for, that price hasn't just impulse down and then it's just suddenly going to retrace. Okay, so impulse correction, looking for that continuation to the downside. And even if we formed something like this, so let's say we tapped into that area and did something like this, tapped into there. This is the reason that I haven't got this on the chart, is one, because it wouldn't happen by the end of the day if you just count the candles, and two, because we don't normally see such larger flags, particularly with pairs such as CAD yen, so early on in a move, if we are going to move to the downside. So that gives me a clue that this is potentially just a scoop. We saw that on the higher time frames, price is often just repeating itself. We saw on the higher time frames this kind of scoop and then a drop. So if that's the case, that may be what's happening on the lower time frames as well, because price is always repeating itself. So maybe just a scoop followed by a drop. So that's what I'm going to be looking for, impulse correction, and then I would look to get short on the break of the flag, and I would easily be able to manage this down to these lows for something in the region of 7 to 8%, depending on how the flag formed. And if we got a risk entry within the flag, so something like this, after we've got the two bottoms, if we got the risk entry within the flag, then the profit potential, even just down to there, even if it only plays out down to there, then we have something in the region of 14 to 15%. Okay, so that's what I'm going to be looking for on CAD Yen. You can see we've had a nice sequence of flags, other than for this kind of scoop. We have this impulse correction, impulse tight correction into this other tight correction. I can see the structure of these flags, which gives me a clue that this is the bigger players stacking their orders for these moves to the downside, which gives me a clue that they're involved. Okay, and that they're also looking at this and that they're just adding to their positions now that price is rejected from this area, for a move potentially all the way down to here, which is where I would anticipate a lot of the bigger players getting out. So that is CAD Yen. I have an alert set just below the ray line. If it doesn't trigger, then I'll not be looking to place a trade on this pair today. So natural gas, let's have a look at this one. So natural gas on the higher time frames. This is a textbook example, in my opinion, of how we trade the markets. There is so much to analyze on natural gas, so I'm going to do that as soon as we've got a bit more time today and a few less pairs on watch. So what do we have? We have this sharp move up, followed by the sharp move down. Okay, give me a clue that there's a lot of orders in this area. We then come back up. We near miss to this area. What have I said in previous videos? When we get close to an area of value, but we don't quite tag it, it's often the case that we'll find our way back up there, especially when we near miss to this area. So when we have a near miss to an area, followed by a near miss to an area, it's often the case that we will take out all of these and then push to the downside. And that's exactly what happens. We break above, catch people the wrong side of the market, stop people out. The limit orders are in this area. Then we push down aggressively. But as with CAD Yen, we don't commit. We don't commit fully to the downside in this instance to take out these lows, like the 90% rule, the base of a piece of structure. What instead happens is we scoot back up. Now, there was lots of fundamentals around this, which I'm sure you'll be aware of them. But what we do have is we push back up, we break to the upside. I'm sure many people thought this was a retest to go long, because this is now, especially when it breaks this far above, people believe that this is now support. And you could well and truly, it's not that support and resistance doesn't work. It's that, typically speaking, many of the people that trade it are getting themselves trading into, they're buying into highs and selling the lows, as it were. Okay, so it just makes it harder to make money in many instances. And a lot of the times it's their other variables surrounding the support and resistance strategy which actually makes them profitable, if they're profitable at all, and not necessarily the support and resistance itself. But in this instance, you could see they would have seen this as a retest, so they start getting long. What happens? We were anticipating potentially a move all the way up to here, but what was more likely at this moment in time was that price would come crashing down. Okay, and that this would not act as support at all. Certainly not for a move all the way up to here. So then we come crashing down back beneath here, and then I'm sure many people would have thought, oh, okay, this is support again. So they start getting long, and it comes to the downside. Well, by this point we would have been anticipating this, because we kind of, once we're down here, we kind of have this left shoulder head, potential right shoulder. Left shoulder, head, right shoulder. And what we do know is that, typically speaking, the right shoulder tends to protrude higher than the left shoulder. So that also makes sense for a potential move to the downside. And that's what happens. We then break the neckline of this head and shoulders pattern. So the neckline being there, left shoulder, head, right shoulder. There's the neckline. We break the neckline, and then we move to the downside aggressively. We don't respect this area where I would have anticipated a big stall in price, as people that caught this move to the downside take profit. Price doesn't stall here at all. So, we can't know what's going to happen in the market. I don't know what's going to happen. I just know what's likely based on probabilities. But in this instance, we don't stall at all at this area of value. We just smash straight through it, and then we have this impulse correction potential continuation. Typically speaking, the impulse down, when we have a correction afterwards, the impulse out of the correction tends to be of a similar length to the preceding impulse, which would take us down to this area. But that doesn't really make sense to me. I mean, are we really headed all the way down to there, to minus figures? I don't think so. Okay, so that's a little illogical. So what I think is more likely, so you can see we have this sharp move up, sharp move down, and then we have this 1, 2, 3 touch structure leading up to here. We break above, but remember, this is on the higher time frames, and we usually catch people the wrong side of the market before pushing to the downside. So what I think is more likely is that if we are headed to the downside longer term, that we may get something like, I think we may get something more like this. Okay, so we may end up with the situation where we end up with this, we tap into this area, and then we have a reversal structure. So we would have that kind of 1, 2. If it was a bit lower, we'd probably near miss this area of value, push up, and then we'd have some kind of reversal structure to push higher. But that's in the future. All I'm concerned about at the moment is that we've had an impulse down followed by a correction, which just so happens to be a 1, 2, 3 touch structure, which breaks above a sharp hook point. Okay, where there would likely be orders and where people would likely get themselves caught the wrong side of the market. Okay, so if you've been watching my videos regularly, you've seen these patterns, I'm sure, multiple times. We have a near miss to the base of this structure. There's so much confluence to this, but obviously, as you can see, we have a lot of impulsive momentum. However, this is a good sign, depending on so long as we actually know how to trade it, because these pieces of structures, the last leg tends to have impulsive momentum behind it. So that's pretty textbook as well. And if I just drill down, so what I'll be looking for today, I was actually initially, just to touch on it, I was anticipating when price was here, when I did my forecast on Saturday morning, that we may push down from there. And when we have these tight consolidations at an area of value, often that acts as the left shoulder, the left shoulder, sorry, in a little mini head and shoulders pattern. So I did actually have my forecast like this. I've just amended that because we've pushed higher. So what I'll be looking for, you can see we have this bullish candle here, this bullish wick, which looks like it's just getting filled. It looks like price is just filling that bullish wick. And the same on the 1 hour chart. What have I just said about bullish wicks? We have a 1 hour bullish wick as well, so that will likely get filled. So what I'll be looking for by the end of the day is the following, with all of this in mind. So I'm not put off by this momentum, but it does mean that we do need to see some convincing price action if I'm looking to get short on this. So I'll be looking for price to push down, followed by a flag. And I've just got it here because you can see that the last place that price consolidated was here. So that could potentially act as the right shoulder to not so much a head and shoulders pattern, but when you get when you just get impulsive momentum like that, price will often consolidate where it consolidated last. And you can see on the 1 hour chart, it last consolidated here. So, but all I'm really interested in is that we get a solid impulse down, followed by a correction. And then I'll be looking to get short either on the break of the flag or within it. You can see that the stop loss looks a little bit wide. That's because that is a 10 pip stop loss, as you can see there. And 10 pips is the minimum that those of us who trade the Falcon strategy go to, typically speaking. You could go shorter. You probably could go shorter, but you have to have some kind of rules in place, even with your stop loss, to be able to trade effectively. And if we got something like this, if we just zoom out to the 4 hour, in this instance, I would want to see a solid 4 hour push down. So if you look at it on the 4 hour chart, we would have a solid impulse down, followed by a correction, and then I would look to get short, and I would be able to manage this down to this trend line, which just so happens to be where price consolidated last time around for something in the region of 5%. And of course, if we kept going, that would be something in the region of 10% down to these lows here. So that's what I'm going to be looking for, folks. And you can see I've got an alert set there just to see if we push down, to this area here, just push a bit lower, just to get some kind of solid. I'm not going to be looking for, I'm not going to be looking for something like this up here. You get to know what's a solid impulse with a little bit of experience, and relative to the impulse up, that's not a convincing impulse down. So I want to see something really convincing, followed by the push down, and then I would look to get short on the break of the flag or within it. So that is it, folks. That's what I'm looking for today. And if they don't shape up, then obviously no trade for me. Thanks for watching. I'll be back with another video shortly, most likely tomorrow. But for now, have a great day, and I will speak to you again soon.